Right, so get this. We're diving deep into the world of renewable energy finance in India today.
Sounds exciting.
It is, especially with this company, ACME Solar Holdings Limited. They're heading for an IPO, and we've got their DRHP and RHP to break it all down.
Those documents are like treasure troves of information. They give us an inside look at how the company operates.
Exactly, like a behind-the-scenes pass.
Mhm.
And trust me, this company has a story to tell. They've been around since 2003, starting in energy management.
Oh, wow. So they've seen the energy landscape evolve quite a bit.
You bet. And they didn't jump on the solar bandwagon late either. They made the switch back in 2009.
That's pretty forward thinking, especially back then.
Right. That's years before solar really took off globally. To make sense of all this, we have our expert with us. So what's so intriguing about ACME being an early bird in the solar scene?
Well, their foresight is really impressive. They saw the potential of solar energy way before it became the hot topic it is today. That early entry gave them a huge head start in establishing a strong market presence. But it's not just about being early, it's about how they've used that advantage to build a really diverse and robust business.
So they were strategic about it, not just lucky. Okay, let's get down to brass tacks here. What exactly does ACME do? I mean, it's more than just slapping up solar panels, right?
Oh, absolutely. ACME develops, builds, owns, operates, and even maintains these massive utility-scale renewable energy projects. Think solar, wind, and even some hybrid projects.
Well, they handle the whole shebang. So they're involved in everything from securing the land to keeping the lights on.
Pretty much, they manage the entire process, from getting permits to actually constructing and then running these projects. It's a very integrated approach, and that gives them a lot of control.
That makes sense. So they're like a one-stop shop for renewable energy. But wait, you said they're not just doing solar.
Nope, they're not putting all their eggs in one basket. They've expanded into wind energy and even those hybrid projects, combining solar and wind power.
Smart move. Hedging their bets. Anything else?
And get this, they're even exploring something called firm and dispatchable renewable energy. It's all about integrating energy storage, like batteries, into the mix.
Okay, I'm all ears. Why is that so important?
Well, it tackles one of the big challenges with renewable energy: reliability. The sun doesn't always shine, and the wind doesn't always blow. This technology stores excess energy for when it's needed, making renewable energy as reliable as traditional sources.
Uh-huh. So it's like having a backup generator, but powered by renewable energy instead of fossil fuels. That's pretty cool.
Exactly. And this is where ACME's vision really shines through. They're already preparing for the future of the energy sector.
All right, so they're doing all this cool stuff, but who are they selling the electricity to?
Their main customers are big players, what we call off-takers. Think government-backed entities like the Solar Energy Corporation of India and NTPC Limited.
Big names, for sure.
Absolutely. These are major players in the Indian power sector, and they sign these long-term contracts called Power Purchase Agreements, PPAs, with ACME.
TPAs, got it. So those long-term contracts provide a stable income stream for ACME.
Exactly. It gives them a steady and predictable revenue flow, which is essential for any business, especially in a sector as dynamic as renewable energy.
Okay, so PBAs are a big part of their income. What else contributes to their revenue?
Well, there are also tariffs and government incentives. You see, India has set some pretty ambitious goals for renewable energy adoption.
I've heard about that. India's been making big moves in the renewable energy space.
Right. To encourage investment in the sector, the government offers things like tax breaks, subsidies, and favorable tariffs. These incentives can have a huge impact on a company's bottom line.
So it's like a financial boost for going green. Sounds like a pretty sweet deal. Okay, enough about the revenue streams. Let's talk numbers. From what I saw in the DRHP, their revenue seems to be on a roll.
It is. Their revenue has been steadily climbing. In fiscal 2024, they hit a total revenue of $14,662.67 million.
Yeah.
That's a significant jump from $13,613.73 million in fiscal 2023.
Okay, so the top line looks pretty healthy. But are they actually making a profit? What about their profitability?
That's where it gets a bit tricky. While their revenue is definitely increasing, their profit margins are feeling the squeeze due to high finance costs.
High finance costs. What does that mean exactly?
Basically, they're paying a lot in interest on their debt. In fiscal 2024, they reported a profit before tax of $9,098.71 million, but that's after taking into account those hefty interest payments.
Hold on, how much debt are we talking about here? That sounds a bit concerning.
As of June 30th, 2024, their total borrowings were a whopping $93,199.14 million.
Wow, that's a lot of debt.
It is, and it translates to a debt-to-equity ratio of 4.80, which is pretty high, even for an industry like renewable energy that requires a lot of upfront capital.
Okay, a debt-to-equity ratio of 4.80. Help me understand what that means for someone like me who's not a financial whiz.
Basically, it means they're using a lot of borrowed money to fuel their growth. For every euro of their own money invested, they have 4.80 of borrowed money.
So they're playing a bit of a high-stakes game here. Right. Using borrowed money to grow quickly can be risky, right?
You hit the nail on the head. It's a double-edged sword. High leverage can amplify gains when things are going well, but it can also magnify losses if things take a downturn.
So there's a trade-off, big potential rewards, but also big potential risks. It's a balancing act for sure. All right, we've covered their business model, market reach, and even peeked into their financials. But how are they doing when it comes to actually generating electricity? How efficient are they?
To gauge that, we need to look at metrics like capacity utilization and cost per megawatt.
Okay, break those down for me. What do those fancy terms actually mean?
Sure, capacity utilization tells us how much of their potential power generation capacity they're actually using. Higher capacity utilization generally translates to better efficiency and more revenue. Cost per megawatt tells us how much it costs them to generate 1 megawatt of electricity, a key indicator of their competitiveness.
Got it. So basically, we're looking at how well they're using their resources and how their costs stack up against the competition.
Interesting. So where does ACME stand in terms of capacity utilization?
Well, it's been a bit up and down, but generally it's in a healthy range. The specific figures vary depending on the type of project and where it's located. For example, a solar farm in a super sunny region will naturally have higher capacity utilization than one in a less sunny area.
Makes sense. It's all about location, location, location. But what about their cost per megawatt? Are they competitive on that front? Cost per megawatt is crucial. ACME's cost has been decreasing in recent years, which is a good sign. But to truly understand their competitiveness, we need to compare this to industry benchmarks and the cost structures of their rivals.
So lower costs are generally better, but we need context to see how they measure up against others. All right, let's shift gears a bit and talk about their growth plans. Every company looking to go public needs a compelling growth story. What's ACME's game plan for the future?
They're definitely aiming to ride the wave of the booming renewable energy market in India. They plan to expand their solar and wind projects, forge strategic partnerships, and focus on innovation to stay ahead of the game.
They're not resting on their laurels. They're actively seeking out ways to grow and outpace the competition. What kind of partnerships are we talking about here?
They're teaming up with companies both in India and internationally to tap into expertise, new technologies, and expand their reach. For example, they've partnered with EDF Renewables for solar projects and UPC Renewables for wind energy.
So they're diversifying their partnerships too, not putting all their eggs in one basket. Smart move.
Exactly. It's all about spreading the risk and exploring different avenues for growth.
Okay, so they've got big plans for the future. But as with any investment, there are risks. What are some of the potential stumbling blocks that could trip up ACME's success?
Well, we've already touched upon one of the big ones, their high debt levels. If interest rates climb or their profitability takes a hit, managing that debt could become a real headache.
Yeah, that debt mountain is definitely a concern. What else should investors be wary of?
Project execution is another area to keep an eye on. Remember those penalties for project delays we mentioned earlier?
Oh yeah, those didn't exactly inspire confidence.
It raises questions about their ability to deliver projects on time and within budget, which can be a major red flag for investors.
Right. Consistent and efficient project execution is crucial for any company, especially one in a fast-growing sector like renewable energy. What other challenges do you see on the horizon?
The regulatory environment in India is always in flux. Policies can change, incentives can be tweaked, and new regulations can pop up.
So it's like navigating a constantly shifting landscape.
Exactly. Remember what happened with the safeguard duty on solar cells? That threw a wrench in the plans of many companies, including ACME.
Oh yeah, you mentioned that earlier. Can you remind us what happened there?
In a nutshell, the Indian government slapped a safeguard duty on imported solar cells to protect domestic manufacturers. While the intention was to boost local production, it ended up increasing costs for companies like ACME who rely on imported components.
Ah, so even though they're in a sector that's generally supported by the government, there's always that risk of sudden policy changes that can impact their bottom line.
Precisely. And this uncertainty is something investors always need to consider when evaluating a company in the renewable energy sector.
Okay, so we've got debt risks, project execution hiccups, and the ever-changing regulatory landscape. What about environmental concerns? Building these massive solar and wind farms must have some impact on the environment, right?
You're absolutely right. Land use and biodiversity are key considerations. Even though solar and wind energy are clean sources, they do require significant land areas.
So it's not just about generating clean energy, but doing it in a way that minimizes environmental harm.
Exactly. And choosing the right location for these projects is crucial to minimize the impact on delicate ecosystems and wildlife habitats.
That makes sense. It's all about striking a balance between clean energy production and environmental protection.
Absolutely. And this is where ESG factors come into play. ESG stands for environmental, social, and governance, and investors are paying more and more attention to these factors.
ESG is a hot topic these days. So how does ACME measure up on that front?
Well, they'll need to clearly demonstrate their commitment to minimizing their environmental footprint, engaging with local communities, and upholding high standards of corporate governance. Transparency is key here.
So it's about walking the talk and showing investors they're serious about sustainability and responsible business practices.
Precisely. It's not just about the bottom line, it's about making a positive impact on the world. Okay, we've covered a lot of ground here. We've talked about their business model, their financials, their growth plans, and the risks they face. ACME is definitely a major player in the Indian renewable energy market, but they also face some significant challenges. Let's dive deeper into some of these key areas, starting with their financials.
Sounds good to me. Let's break down those numbers a bit further and see what they reveal about ACME's financial health and long-term sustainability. I'm especially curious about those debt levels and how they plan to manage that as they continue to grow.
Excellent point. Let's start by dissecting their debt structure, the interest rates they're paying, and their plans for deleveraging. That'll give us a clearer picture of their financial risks and how they're addressing them.
Okay, so we're going deep into the debt rabbit hole. Let's see what we can uncover.
All right, let's get into those debt specifics. We know ACME is carrying a hefty write-off 93,199.14 million in borrowings, but it's not all one big lump sum, you know?
So
Yeah.
different types of loans then.
Exactly. They've got a mix of loans with various interest rates and repayment schedules. Some are long-term loans specifically for financing projects. Others might be short-term for managing day-to-day expenses.
Makes sense. So what should investors be looking at here? What are the red flags?
Well, the interest rates on those loans are crucial. High interest can really chip away at profits, especially when a company's carrying a lot of debt.
Definitely. Makes those interest payments even more painful.
Right. Now, the DRHP doesn't give us a complete picture of the interest rates for each loan. That's probably in the RHP, which we haven't gotten yet.
More to uncover later then. But still, a mountain of debt and potentially high interest. Not exactly a comforting thought. What's their plan to handle this? Any talk of, reducing that debt?
They do mention using some of the IPO funds to pay down debt. That's a good sign, at least. Shows they understand the risk and are thinking about ways to address it.
So they acknowledge the debt elephant in the room.
Yeah. But of course, the devil's in the details. We need to see exactly how much they allocate to debt reduction and what their long-term strategy is.
So it's like they've given us a peek at the roadmap, but we need the full directions to really understand where they're going. Okay, shifting gears a bit. You mentioned firm and dispatchable renewable energy earlier. Sounds kind of complicated. Can you break that down? Why is it such a big deal?
Sure. So one of the knocks against renewable energy is that it can be a bit, well, unreliable. Sun's not always shining, wind's not always blowing. You know the drill.
Yeah, that unpredictability can be a problem.
Exactly. And firm and dispatchable is all about solving that. It's about making renewable energy as reliable as, say, coal or natural gas, making it as predictable as traditional power sources.
Okay, so smoothing out those peaks and dips in energy production, how do they actually do that? Magic.
Not quite magic. Think giant grid-scale batteries. When there's excess solar or wind power, that energy gets stored in these batteries. Then when the sun dips or the wind dies down, boom, the stored energy kicks in to keep the lights on.
So it's like a backup power system, but powered by clean energy instead of those fossil fuels. Very clever.
Right. It's a win-win. Good for the environment and helps stabilize the power grid.
Speaking of wins, what about the competition? India's renewable energy scene seems pretty crowded.
Yeah.
Who are ACME's main rivals and how do they stack up?
Oh, yeah, the competition's heating up for sure. The Indian renewable energy market's attracting all sorts, both homegrown companies and international players. Everyone wants a piece of this growing pie.
That makes sense. So who are the big names they're going up against?
Well, there's Adani Green Energy, Tata Power, Renew Power. They're all big players with deep pockets and ambitious plans.
So it's a tough field to play in. What gives ACME an edge? What are their strengths?
Well, their experience is a big one. They've been in the game for a while now, seen the ups and downs, built a solid foundation. That early entry into the market, it's given them valuable knowledge and connections.
Right. Experience is definitely a plus in any field. What else?
Their integrated business model, handling everything in-house, is another advantage. Potentially helps them keep costs down and move projects along quicker.
Right. That vertical integration we talked about seems like it gives them more control over the whole process.
Exactly. And let's not forget their diversification. Expanding into wind, those hybrid projects, and firm and dispatchable energy, it all broadens their base, Less reliance on a single technology or market.
So they're spreading the risk and opening up multiple avenues for growth. Smart.
Exactly. This multifaceted approach, plus their experience and that integrated model, it all positions them well in this market, which is constantly changing and evolving.
All right. So we've covered their strengths. But even the best companies have weaknesses. What areas could ACME improve on? Where are they vulnerable?
We've already talked about that debt, which is a definite concern, but their project execution could use some work too. Those penalties for delays.
Yeah, not a good look.
Definitely raises questions about their ability to keep projects on track and on budget. That can really erode investor confidence.
For sure. So consistent and efficient project execution is crucial for maintaining that trust. What about technology? Are they keeping up with the latest and greatest in the solar and wind world?
Good point. Renewable energy is all about innovation. New tech's popping up constantly, so companies have to stay ahead of the curve. ACME's done a decent job adopting new tech so far, but they can't afford to slack off on research and development.
So they've got to keep pace with that innovation race. What about their focus on sustainability and ESG? We talked about the environmental impact of these projects. How are they addressing those concerns?
That's a big one for investors, especially those who prioritize ESG factors. ACME needs to show they're serious about minimizing their environmental footprint, engaging with local communities, and upholding high standards of corporate governance.
So it's not just about profits, it's about doing business responsibly.
Exactly. They need to prove they're walking the walk, not just talking the talk. That transparency will be key for attracting and keeping investors who care about these issues.
So we've looked at their financials, their competitors, their strengths, their weaknesses. Let's cut to the chase. Is ACME a good investment?
The million-dollar question. And like with any investment, there's no simple yes or no answer. It all boils down to your individual goals, your risk tolerance, and how you assess ACME's potential.
So no crystal ball predictions here, but can we at least break down the main things investors should think about when considering this IPO?
Definitely. Let's start with their financial performance. We've seen the revenue growth, but we also need to look closely at their profitability. And of course, that debt. How they manage that debt will be crucial.
Debt management, check. What else is on the list?
Project execution is another big one. Those penalties for delays, they're a warning sign. Investors need to figure out if ACME can deliver projects on time and on budget.
Right. Consistent and efficient execution builds trust. What about the bigger picture stuff, like the regulatory environment?
Yes, that's always a wild card. The Indian government's been supportive of renewable energy, but policies can shift, incentives can change. Investors need to factor in that uncertainty and decide if ACME is adaptable enough to handle potential curveballs.
So keeping a close eye on the policy landscape is crucial. What about their growth prospects? Do they have room to grow even more?
Oh, for sure. ACME is in a high-growth market. India's demand for renewable energy is expected to skyrocket in the coming years, which is great for companies like ACME. But investors need to consider whether ACME can actually capitalize on that growth and outmaneuver their rivals.
So growth potential doesn't automatically equal success.
Exactly. And last but not least, we can't forget about those ESG factors. Investors are scrutinizing companies' impact on the environment and society more than ever before. ACME needs to demonstrate a real commitment to sustainability if they want to attract and keep those investors who care about these values.
So it's a multi-pronged evaluation. Investors need to look at their financials, their operations, the regulatory landscape, their growth potential, and their commitment to ESG.
Precisely. It's about weighing the risks and opportunities and making an informed decision based on your own investment criteria.
All right, we've covered a lot here. Let's take a quick breather and then come back with some final thoughts about what this all means for potential investors and the future of ACME in this exciting Indian renewable energy market. All right, we're back, ready to wrap up our deep dive into ACME Solar Holdings Limited. We've gone through their business model, their financials, the risks, the opportunities. It's a lot. But they're clearly a major player in India's renewable energy scene. The question is, could they become a global leader in this whole clean energy transition?
That's the big question, isn't it? They're focused on India right now, sure, but the experience they've built up, the know-how, that could translate to opportunities in other parts of the world too.
So we might see ACME expanding beyond India, making a splash on the global stage.
It's definitely possible. The demand for renewable energy is worldwide, and companies with a solid track record like ACME, they'll be in high demand as the world tries to ditch those fossil fuels.
Okay, so let's say they do want to go global. What would it take for them to really succeed?
Well, first things first, they got to understand the lay of the land. Each country has its own rules and incentives for renewable energy. ACME would need to adapt their game plan to fit each specific market.
So flexibility is key, being able to adjust to different playing fields. What else?
Partnerships, strong partnerships are super important. Teaming up with local companies, folks who know the market inside and out, have those connections already, that can give them a huge leg up.
Right, those local partners can help them navigate all those tricky details in a new market. Makes sense.
And of course, they need to be smart with their money. Going international takes serious cash, so a solid financial plan is a must.
So strategic planning, careful spending, and being willing to adapt sounds like a recipe for success, not just in renewable energy, but in any business.
Yeah.
They've definitely shown they're ambitious and capable in the Indian market.
Absolutely. But let's step back for a second and think about the bigger picture here. This clean energy shift, it's not just about making money. It's about tackling one of the biggest challenges we face, climate change.
Couldn't agree more. It's about building a more sustainable future for everyone.
Exactly. And for investors, it's a chance to align their financial goals with their values, putting their money behind companies that are making a positive impact.
Investing in a better future. That's a powerful idea.
It is. It's about investing in a future where clean energy is available to everyone, no matter where they live.
Well said. And on that note, we've come to the end of our deep dive into ACME Solar Holdings Limited. We've learned a lot about their operations, their financials, their goals, the challenges they're facing.
And this is just the beginning, really. We encourage you to check out their DRHP and RHP, explore their website, keep up with industry news.
Do your homework, folks. Informed investors make better decisions. And most importantly, still curious, keep learning, and join us next time for another deep dive into a fascinating topic. Until then, happy investing.